Corporation live stream. I'm Matthew Horncastle. I'm very excited to be presenting to you. I have to tell you the truth about yesterday. I think I didn't nail yesterday because my laptop was about to die and I rushed some of the questions. So I didn't give you my full effort yesterday, but I've got a nice full charged laptop today. And we're going to get into a Williams Corporation capital presentation. So I'm very excited about this. So it does say in the title investor webinar, and obviously there's lots of different things Williams Corporation can do for investors. And today we're going to be discussing investing in Williams Corporation capital. So let's get into it. I will share my screen. Here we go. So hopefully all of you can see the investment webinar, and I'm very excited to go through this with you today. Now, every good presentation needs to start with a legal disclaimer. So the legal disclaimer is obviously written on the screen, but the primary thing for me to go over with you is I'm not a financial advisor. This isn't financial advice, and please seek your own financial advice before making an investment decision. Now, our agenda today, we're going to have an introduction to myself. We're going to talk about the New Zealand residential property market. We're going to discuss Williams Corporation, and we're going to discuss Williams Corporation Capital, which is the investment we are going to dive deep into today. So a quick introduction to myself. Oh no, I'm not wearing the same polo. That's a rod and gun one. But you can see that is completely who I am. My name is Matthew Horncastle. I am from a property family. Everyone in my family is in construction. Mother, father, aunties, uncles, granddads, cousins, the whole shebang. I am a qualified builder, so I got my license, my New Zealand carpentry license. I have owned a business since 2011. I think of myself as a thought leader in the New Zealand business space, either that or I post a lot on social media, one of the two. I'm heavily invested in property. I personally have a rental portfolio of over 25 dwellings, and I also own some residential houses, some Airbnb, so short-term stay, a commercial building, etc., etc. And my largest claim to fame, I am the co-founder of Williams Corporation, which is one of the largest privately owned builders in New Zealand. Now, we're going to discuss the New Zealand residential property market, and these are just a few bullet points that we're going to go through in the presentation. So starting with global issues / conflicts, and I could do a whole presentation on this, but I think the main thing I want to say to you for the purpose of a brief, good, sharp, quick presentation is New Zealand is a wonderful place. And there are lots of issues in the world, and there are lots of countries that face real hardship and problems. And we are very, very lucky in New Zealand. It's a very beautiful place, but we also don't face lots of those conflicts. And the chance of us having a major conflict is very low, just due to our history and where we are geographically, etc., etc. So essentially what we're seeing in New Zealand is a long-term steady rise in population. Now, some people will say, well, oh, there's small periods where New Zealand's population doesn't rise. And yes, that is true. But the main thing is New Zealand is a wonderful place to live. And the main reason that there are periods where we don't have population increase is immigration policy. We have lots and lots of people that want to live here. And so when you look at any long-term data in New Zealand, you see large population growth over time. And then you have delivery of houses. And the main thing is we're not delivering enough houses to match our population growth. And delivery over time is actually stagnant or decreasing. Now, some people will say that building consent numbers have increased, and that is true. We're having a large amount of building consents increase, but our annual deliveries are nowhere where they need to be to keep up with our historic population growth. And really the main thing that matters, the consent isn't overly relevant. What matters is how many houses are we delivering each year. And also another interesting thing that's happening is the average household size is decreasing. So that is how many people in each dwelling is going down. And what that means is without population increasing, if we have average dwelling size decreasing, we actually need more houses with the population staying the same size. So New Zealand's a great place to live. Our population's decreasing. We're not building enough houses. And also, replacement costs of houses is very, very high. So we're seeing the construction costs getting really expensive. And that is because councils and governments are always making it harder to build a house. We are having labour rates, minimum wages, etc., are always increasing. Material costs are increasing. And it's essentially having the price to build a house or rebuild a house is increasing. Now, what that means is when you have an asset that's more expensive to replace than it was, say, last year or the year before, that usually translates to the price of that asset increasing. And then what we see is the New Zealand average house price. So this is a great graph from interest.co.nz. And what you can see is house price records right back to 1994. And there's a frozen piece on the graph right here, 30th of September 2014, when the average New Zealand house price was 420,000. And that is when I started doing these presentations. And what's interesting is the fundamentals that I discussed in my first ever presentation are exactly the same. I covered the previous 4 slides and I said, because of these factors, we will see New Zealand house prices continue to rise. And so, as you can see here, since I first did that presentation, we've seen a very, very large increase in house prices, followed by a short decline. Now, after COVID, we had a lot of printing of money and we had essentially, in my opinion, speculation in the housing market that drove up prices more than the base supply and demand curve. But also, if you were to look at this growth over time, I see our house price now, where it's pulled back, to be of good value and on track to where we should be. So the average house in New Zealand's touch over 800,000, and I see that as about right and where it should be. And because of those fundamentals that are in place, I see the market on track to continue to grow over time like it has in the past. So a little bit about Williams Corporation, our market position, our track record, our product, and our equity. So starting with our marketing position, as of August 22, we were the second largest builder in New Zealand, consenting 774 dwellings in a rolling 12-month period. Now, there is actually a new one of these that's come out. We do jump backwards and forwards. I think Mike Greer got us last month, so we need to update that. But the main thing to convey here is we are one of the largest builders in New Zealand. We're not a franchise, we're privately owned. For example, GJ Gardner, who's the largest builder in New Zealand based on building consents issued, is a franchise, which means that is multiple small businesses that aggregate together. But yeah, we are a large builder, and the reason we're a large builder is because we do a very good job. And yeah, we're just doing really well. We're a great company. Probably another thing I want to point out on this slide is that there are a lot of builders that say they're building a lot of houses, but when you look at the report, they're not there. There's something about the building industry. There's a lot of essentially over embellishing of their numbers and or just straight out lying, where this BCI Top House Builders report is a really good way for you, the consumer, to actually see the data and to see if that builder is building the houses they claim they are. So this is our settlements for a rolling 12-month period. And what you can see here is Williams Corporation has delivered 648 houses to our customers in a rolling 12-month period. So every single month in Williams Corporation, we deliver on average 54 houses. And you can see here we have a fantastic spread across Christchurch, Auckland, and Wellington, giving us a good diversity of where we're building these houses. This is our sales for a rolling 12 months. So we've sold 500 houses for a rolling 12 months. So the market has come back a bit from, say, this time last year, where our sales for a rolling 12 months were approximately 800. But it's just pursuant with the market that we saw in 2021. We made about 500 houses and we sold about 500 houses in a rolling 12 months in 2021. So it's just like jumping back in time 2 years. And we had a fantastic year that year. Williams Corporation traded very well. So that doesn't bother us. Obviously, you always want to sell more houses. You always want the business to be larger, but we do need to trade within the market we're in. So this shows Williams Corporation over time. So in 2016, we delivered a whopping 3 houses. 2017, 20, 2018, 40, 2019, 61, 2020, 181, 2021, 335, 2022, which is the financial year that just finished. These are financial years, by the way, so that's why it looks like it's a year ahead. So if for the people that are thinking calendar year, just deduct a year. And then so far, this financial year, we have delivered 306 houses, and we're on track to deliver 600 to 700 houses for the financial year. That's approximately where our numbers are. So in our career, this graph's actually a tiny bit outdated. You can see where it's from April to March. So this, as of the time this graph was published, we delivered 1,443 houses. I think we're now up to about 1,480 houses approximately, at about $800 million of revenue, which is really cool. So what this is pointing out is we've refined our model over a long period of time. Before 2016, we were a contract builder right back to 2011. So we've traded since 2011, and we were involved heavily in the construction industry doing building, temporary fencing, skips, etc., etc. But yeah, over a long period of time, we've refined our skills and built a really strong company to be in the market leading position that we are today. So a little bit about our product. Williams Corporation product, we specialize in townhouses that are affordable to buy, affordable to live in, and affordable to maintain, where you can live, work, and play. We have a standardized product, so we use the same floor plans and the same color schemes. We have 1 interior color scheme and about 8 exterior color schemes and about 15 floor plans. So what that gives us, it gives us the ability to build a large amount of houses while knowing our costs and knowing our time frame. Anyone that's built houses before, you'll know that the time frames blow out and the costs blow out, and our standardized product mitigates a lot of those risks. Why our homes are so popular? So they are low maintenance, affordable to buy, affordable to live in, and affordable to maintain, where you can live, work, and play. Exceptionally well built. We don't have price escalation, so we have a fixed price. They're turnkey, so we provide all of the appliances, all of the blinds, all of the landscaping. You can secure one with only a 10% deposit in New Zealand and a 20% deposit if you are foreign. We group buy the insurance, so you get really great value insurance. And with a new home, you get other benefits such as a 5-year bright line tax and interest deductibilities. We can have an accountant, if you want to dive deeper into the tax side, we can have an accountant send you some information on that. So our group equity, we've turned over, if you were to crudely look at Williams Corporation, we've turned over $800 million. We had a 15% gross profit. We then had 5% overhead. And so we had a 10% net profit. So that's 80 million. And then we paid income tax of roughly 30 odd million. And our equity position, tax paid cash equity is 52 million. Now, on top of that, Williams Corporation is a big company, and I believe Williams Corporation is very valuable. I think one day we'll take Williams Corporation public and you'll see it's worth a lot of money. But our tax paid conservative cash equity is 52 million. And all of that is on the line when you purchase a house from Williams Corporation or invest in one of our products. We have very thorough personal guarantees to protect our investors. So a little bit about Williams Corporation Capital. This is the invest product that I want to show to you today. Now, again, a quick legal disclaimer. Williams Corporation Capital is a wholesale investment open to wholesale investors. I'm not a financial advisor. This isn't financial advice. Please seek your own financial advice before making an investment decision. Also, the IM and all the information required for you to assess the risks and merits of this offer are in a Google Drive, and they're available on request from any Williams Corporation client consultant. So the executive summary of Williams Corporation Capital is Williams Corporation sells more houses than money we have to build them. So we go out to the market, you the investor watching this video, and we say, we need more money so we can build more houses. We will pay you a 10% return gross per annum, and in return, we would like to use your money to build more houses. So that's the base summary of why we have this product. We have a fantastic product, our houses. We have lots of customers that want to buy them, and we need more capital to be able to deliver those houses to our customers. So who is eligible to make this investment? In Williams Corporation Capital, this is open to wholesale investors. Now, what is a wholesale investor? A wholesale investor is someone that has $750,000 of cash, someone who is in the business of investment, or someone who has a consolidated net assets or turnover more than 5 million. Now, there is a detailed explanation for all of this in our IM and on the FMA website. So the return for this product is 10% per annum gross. We pay out 2.5% each quarter. And the tax rate is 33%. If for some reason you're taxed lower than 33%, we can have a discussion about imputation credits, etc., etc. But yeah, we deduct tax at 33%. So there's three parts to the security. The first is the operating rules. So before construction begins on a project, pre-sales must total at least 70% of the project's value. When a project is being funded from Williams Corporation Capital or any other funder, we cannot exceed 70% of the project's value for funding the development. We use a standardized drawdown table for the drawdown. So it's like this percent for roof on, this percent for windows in, etc., etc. And investors' funds can only be used for acquisition of sites for development or ongoing development. So we can only use your money to do what we're good at, what we've been doing for a long time. We cannot use it to do something we haven't done before, say buy a shopping mall or purchase shares. We can only do it based on our track record. So the next part of the security is the base security. So myself and my business partner, Blair, put in the first $5.9 million into Williams Corporation Capital. And we did these as an instrument called B-class shares. Now, what a B-class share is in this instance, we cannot withdraw that money while other investors have money. And in the event of a loss, that money gets spent first. You also receive personal guarantees from myself and Blair, the company's directors, and this does extend to our personal trusts. And the guarantee of Williams Corporation and our group of companies is worth conservatively $52 million of cash. Then the investor receives security over all of our projects. So there's three kinds of security. The first kind is a deed of assignment. Now, what a deed of assignment is, we normally purchase a development and we have a delay until settlement. And in that delay until settlement, we are doing the consenting and the sales. And what a deed of assignment means is this entity owns the contract for that development. When we settle, we normally take a first mortgage, and that's where we're doing the initial works. And then if we have a primary funder, say like a main tier bank, the fund would take a second mortgage behind that primary funder. Now, One thing to note is as Williams Corporation has got slightly smaller and Williams Corporation capital continues to grow, we're doing a lot of projects on a first mortgage basis in this entity. So the withdrawal process, when you invest, you are locked in for a 12-month period. That allows us to utilize the money to get some projects underway. And then when you want to withdraw, we have to act within your best interest as a shareholder. And after your period of your 12-month lock-in, you need to give us up to 6 months notice for a withdrawal. And if 33% of investors are trying to withdraw within the same period, say that's 6 months, we can pause investments up to 12 months. And that just allows us to deliver our projects that we have under construction safely before returning your money. And if you're purchasing a Williams Corporation house, you're allowed to withdraw your capital to settle that house. So some people do put money into this entity that they use towards settlement at the end of a project. So this shows our funds under management for a rolling 12-month period. So you can see back in October 2021, we had $143 million under management. And as of today, we have $156 million under management. So being really crude, on an average month, we would raise $3 million and return $2 million, being really crude. We actually raise a tiny bit more than that. But yeah, we've sort of hit a point where the fund is very stable in its size and funds under management. Now, this is something that I'm very proud of. This is our dividend history since September 2019. And we've paid out over $25 million to our investors. So yeah, that's something I'm really, really proud of. We've never missed a dividend payment. We always pay on time or early. And our investors, of course, are really happy. As an investor myself, I can tell you that dividend day is always very cool. Now, as an investor of Williams Corporation, every month you'll get a formal monthly update. And that is written from myself and Blair, the company's directors. And we just cover a little bit of information like how many houses we sold, how many settlements we have underway, a summary of where the settlements were from and how much it was, any houses that are available, a summary about the sales, a summary about how the business is trading, the size of the fund that you're invested in. So this presentation's Williams Corporation Capital, any cash that we are holding in the lawyer's trust account, and then general information about the fund, and then signed off by the directors. And then we give you this document here, which is a allocation table. This is a really, really good document. So what you can see is the houses that we are building, how many of them are sold, what company is doing the development work, the address of the development, the city, the security, the project sale price, the 70% LVR cap, how much the fund and the first mortgage funder are funding, how much the first mortgage fund is funding, the opening position of the fund, any money that is returned or drawn down for the month, the closing position of the fund, what is happening on site, and the estimated settlement date, as well as a few totals down the bottom so you can understand securities and sales, etc., etc. Now, if you choose to go through with the investment, again, after receiving appropriate independent advice, we have a Google Drive link. This has all of the information about Williams Corporation Capital. There are 3 forms you need to print and sign. A member of our team, one of our client consultants, is happy to go through it with you page by page. Once you send us those forms, they'll be sent to our lawyer and they'll be audited. And once the lawyer is happy, they will send you a trust account form. And then you simply deposit deposit the funds, and then your shares will be issued in the investment. So the summary here is we are good people. We run a good company. We would love to have you as an investor. So if this is something you're interested in, we would love to have you. And full information, the Google Drive is available on request from any Williams Corporation client consultant. These are my personal details. I'm one of the directors of the company. You are welcome to message me and touch base about anything, any questions you have. I would love to hear from you. So I'll just jump back to our stream. So yeah, I really enjoyed that, guys. I'll just quickly check to see if the marketing team has sent me through any questions, because sometimes we get questions. So we haven't had any. Maybe there have been some, but if there have, I'm sure I can get onto them tomorrow. So I'm making an effort to go live to you every single day and give you all the information you need to make decisions. I would love to have you as an investor in Williams Corporation Capital. As of today, across our 3 open funds, we have 340 investors with $158 million under management. So that's something we're very proud of. We would love to grow that because we have lots of houses we want to build, lots of projects, some exciting blocks of land that we'd love to purchase. So yeah, if this is something that's right for you, if you know somebody that this might be right for, make sure you get in touch. Have a great day. Enjoy this beautiful sunny Wednesday. It's sunny here in Christchurch. Hopefully it's sunny where you are. And I will see you next time. Thanks very much.